Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart.
In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of monthly demand and support. In fact, this zone was acting as previous resistance here. It was broken to the upside with this impulse. At that point, this previous resistance became support here, and again here. And as the market is testing that zone and rejecting it to the upside, we could expect more bullish price action to be created away from this area. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, we can notice how we do have a quite strong impulse to the upside. Now, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a 50% and 0.32 retracements, which are lining up precisely with this previous resistance. Turn support at this level, which we could expect this market to potentially go and test and then to reject to the upside, meaning that looking at the market here on the weekly time frame, there is a possibility for a bit more bearish price action to be created before then getting a potential rejection to the upside. Dropping down on the daily time frame, what do we see? Well, here on the daily, we can see how the market is currently bounded in between resistance and support. We have at the top the resistance at this level and at the bottom the support at this level. Until the market will remain in between this resistance and support, we can expect and we can essentially classify this market to be in a range. And until we have a market in a range, more horizontal price action is definitely very possible. So what we would need in order to have a rejection to the upside or to the downside is a break of structure. In fact, if we get a break above this high, at that point, this previous resistance would become support. And on the retest of the previous resistance turn support, this is where we would have quite good probabilities to see a potential reversal to the upside and more bullish continuation to be printed. Now, I did speak about USDJPY when the market was around this area. I did speak about all the reasons for which I was expecting this potential rejection to the upside. And by the way, I will link that previous analysis in the description so you can go and check it out for more free education. Now, before I continue here with the analysis that we have from a technical perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials in the market are doing. Now, the first thing that we have to keep in mind is that if we're checking the data for the JPY, we're actually checking JPY USD because all currencies on the spot are traded against the USD. So if you look at the data for the JPY, already you're looking at JPY USD. Since we want information on USDJPY, we simply have to reverse everything. And what we can notice here is that we are approaching one of the lowest levels of net positioning that we had in quite some time. In fact, we went from having the minus 20k net positioning that we had here all the way down to now having minus 104k net positions. Now, this makes the JPY very weak, and a weak JPY means that USDJPY is very strong because institutions are moving their positioning to the bearish side for the JPY. So if we get the break above this high on the retest of this previous resistance turn support, this is a quite interesting area inside of which institutions could be adding even more shorts on the JPY, making the JPY even weaker, so decreasing the net positions even more. And at that point, we would have quite good probabilities to see a potential reversal to the upside for USDJPY to continue higher. So if we get the break above the high of this range on the retest of the previous resistance turn support, how we could be approaching a potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open your trading account with them and move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description.
If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.